Corporate India is making more money than it has in recent years. In the fourth quarter of FY26, India Inc. has posted its strongest profit margins in at least 5 years. So what changed, and more importantly, can the margins hold? Business Standards analysis of 837 companies shows that the combined net profits grew 15.5% year-on-year in the January to March quarter. That is much faster compared to the revenue growth of these firms, which came in at 9.5%. Together, these companies reported total adjusted net profits of 3.24 trillion rupees in quarter 4. That's up from 2.92 trillion in the previous quarter and 2.81 trillion in the same quarter last year. Their combined revenues also rose to 28.65 trillion rupees compared to 27.71 trillion in quarter 3 of FY26 and 26.16 trillion a year ago. And here is where it gets interesting. The adjusted margin of profit after tax in the fourth quarter increased to 11.3%, up 60 basis points year-on-year. 5 years ago, in quarter 4 of FY21, net profit margins were at 8.6%. They have now risen nearly 30% from those levels. So what's driving this surge? The real driver is that the company's costs did not rise as much as their revenues. Key expenses including salaries, wages, interest payments and overheads all saw slower growth. But the biggest boost came from lower interest costs. Overall interest expenses rose just 2.8%. That is the slowest pace in the last 16 quarters. The banking, financial services and insurance or BFSI sector saw the sharpest benefit, with interest expenses rising only 2.2%. At the same time, employee costs also eased. The share of salaries and wages fell to 11.3% of revenues, the lowest in the last 21 quarters. Interest costs as a share of revenue also declined to 16.1%, which was at 17.1% in the quarter 3 of FY26 and 17.6% a year ago. But the key question now, will this momentum continue? Analysts warn that the margin expansion may not be sustainable for long due to rising inflation and lower consumer demand. Experts also note that higher bond yields could increase borrowing costs and further pressure corporate profitability as it makes borrowing more expensive for companies. A recent MK Global report highlights rising cost pressures, with India's wholesale price index surging to 8.3% in April, while fuel and power inflation surged to 24.7%. For now, corporate India is seeing strong margin gains, but cost pressures could shape the next phase. Follow Business Standard for more such stories.